Ladies and gentlemen, I'm joined by Cassandra and Erin, two of our amazing team members here at My Credit Guy. I'd like to introduce myself really quickly. I'm Brett Robinson, Director of Education here at My Credit Guy. We are happy to have you. We got such an incredible topic today. It should be a lot of fun talking about what we're talking about today. Today, we are talking about the different forms of credit and how to use credit. We got a lot of people checking in. Trisha's saying hello. Shelby saying hello. Heather, Stacy, hello, you guys. Nice to see you. Thank you for joining us. So again, I'm Brett Robinson. I'm out here in sunny Orlando, Florida, and I'm going to introduce two of our best here in the company. We will start with who we affectionately call the gatekeeper of My Credit Guy. We will start off with Miss Cassandra Hill. Hello, Cassandra.
Hi.
Cassandra, thank you for joining us today. I talk about you a lot, believe it or not.
Oh no.
In a good way. I promise, in a good way. When I first started, and Sam and Trisha have me sitting with employees and folks who can teach me a lot, and you taught me a lot. Thank you for your time. But the one thing I always said, well, like Cassandra has the perfect tone. Like her tone on the phone, like, listen, if I called a business and I had a problem and Cassandra answered the phone, I would not have a problem anymore. Like your voice, your tone is your tone is perfect. And I sat with you and you welcome new clients to the company. You explain what we do. You walk clients through the process while they're here at My Credit Guy. And then you also did another amazing thing. You also interview people to see if they're even a good fit for our company. I watched you turn, I think that one day we sat together a few days, but that one day, I think you turned away 3 people. You literally gave them advice and you were like, you're not in that bad of a shape. Here's all I would do if I was you. And you don't need us. We don't need to charge you any money. You don't need us. So can you just quickly explain like how you go about your day, and how you go about explaining the process really quickly, and also where you're from, how long you've been with the company, and all that good stuff, because we really want to know about that.
Yeah, absolutely. Thanks for having me on here, Brett. So I've been with My Credit Guy almost a year. May, I think 13th will be my 1-year mark. Super exciting. I actually started out as Trisha Parker's assistant. I still am her assistant, but I've slowly moved into like the sales role, like Brett said, the gatekeeper. And I've been doing sales and Trish being her assistant for a while now. Let's see. I'm originally from Wisconsin, and you can probably tell by my accent. Yeah, everybody says, I know where you're from. So I moved out to Arizona. I'm at our Arizona Gilbert office. Moved here about a year ago. So super excited to be in, like Brett said, sunny Orlando. It's sunny Phoenix. I love it. Yeah. And I really found my home here. It's super awesome. So getting into like what I do like for the clients. So like Brett said, I'm like the gatekeeper. I get those leads. I, call them and I say, hey, I was referred to you by so-and-so, their loan officer. And then I just basically ask them like, so tell me a little bit about your credit. Like, tell me your story. I want to know what's going on, because credit can be embarrassing. It can be difficult. It can be confusing and overwhelming. So I'm like, yeah, just tell me your story. Once I get their side of the story, then I can say, all right, awesome. Now here's what we can do for you. And then I just explain our program, what we can do for them, how we can take care of those things, let them ask questions along the way, and just I'm that friendly, warm voice to bring them into the program.
Yeah, you are that friendly, warm voice, right, Erin? I want to tell her everything. I want to tell her my deepest, darkest secrets right now, right?
Oh, I get that. Yeah, people want to tell me all kinds of good stuff. I'm like, oh, okay. I've been on the phone for a long time here. That I've got all the stories.
I'm telling you, lady, your voice it's freaking perfect. Like I just remember like the clients, they just would be, they'd get done with like their interview, and then it would just be talking about, okay, well, Cassandra, actually, all right, here's what I want to do. I want to get a house, and I got a daughter. She needs a car. You think I should buy my daughter a car right now? Like it turns into like Cassandra's counseling, right? Like it's like a counseling session. Like people are asking you, what decisions they should be making. But I think that's just a merit of like the care and the attention you give to
Mm-hmm.
people. You know, like you're just so right for what you do. And I want to say
Thanks.
thank you for doing what you do here every day. Thanks for what you do. So
Yeah,
so,
absolutely.
so we got some questions for you. So stay tuned. Don't go nowhere. Don't go nowhere. But now I want to move over into, so after you guys deal with Cassandra and she, of course, interviews you, you set your goals and all that, and she explains what our processes here are at MCG, at My Credit Guide, you are going to be assigned a credit coach. And we have one of our amazing team leads here. She runs the gold team. Erin, is gold team in the house?
I think so. I think so. Today. Yeah,
You gotta say it more confident than that. I think so. I think
yeah. No,
here.
they're here. They're here. Yeah, they're here.
No, but I want to introduce our wonderful team lead of the gold team, Miss Erin Stueck. I said that right, didn't I?
Yeah, you did.
Awesome, Stueck. Erin, tell us a little bit about yourself and your time here at MCG.
Yeah, so I have been here for just almost a year and a half now. I started as just a coach, but moved into the team lead position about 3 months ago or so. It's been amazing. I mean, the gold team is great. Really what we do is, like you go through Cassandra's step, Cassandra then pass you on to a coach. We then, come up with a game plan of what we need to do to get you to where you need to be, whether it's, doing the few things that we're going to be talking about here, using those credit lines, how you should, or obtaining those credit lines that are going to help you, gain as much positive impact as possible and move and I guess get you back. That's our main goal, is working with you, getting you to your goal and getting you back to where you need to be. Unlike Brett and Cassandra, I'm in rainy Iowa.
Oh, it's raining.
At least today. Yeah, it's been raining days, but it's fine. That's what you expect here, so it's fine.
So you're in the Iowa office.
Yes.
Awesome. How long have you lived in Iowa?
My whole life.
Your whole life?
Yep.
Wow. So you leaving anytime soon?
No.
There you go. You're just there for life. Iowa for life.
Yep.
Well, awesome. Well, thanks, Erin. I know you're very busy. Cassandra, you as well. Thank you guys for making some time for us today. So today, what our goal is today, right? What's our goal today? Well, for the viewers, we want to educate them on types of credit and why credit matters, right? Like, it's very easy to look this stuff up, but today what I want to bring to these people is some of your experiences with these things that we're going to be talking about. How do you counsel somebody? How do you guide somebody along when we're talking about lines of credit? Like, Erin, should I open a credit card right now? Yes or no, or why not? So I just want to dig a little deeper into, anybody can Google this information, but let's bring some experiences, some real world experiences to the topic, right? So why does credit matter? Well, first off, we're all in agreement. You can't do really anything. Like, credit affects everything in our lives, right? Every day we're affected by credit. It affects us in literally every aspect of our life, especially when we are going to purchase something. We are looked at by how healthy our credit is, right? Like, that's literally what they're looking at. Are we worthy of getting money, right? Are we worthy enough to get a loan of a few $100,000? I spend a lot of time on Facebook in a lot of different Facebook groups. That is a big part of my day, educating people on. I just got into this conversation yesterday where people were like, why can I rent an apartment for 10 years, but I can't get a mortgage? Well, because you've shown you can rent, but you haven't shown you can be worthy of a home loan. And your credit score is a determining factor in that, right? So that's one way you're being affected, renting versus buying. You need to get credit worthy to purchase that home so you can stop renting. Right. So that's a huge one where it affects your life, right? It affects, maybe if you have a good credit score, maybe you're getting some fees waived, right? Maybe you get some fees waived. Maybe it's affected by how much you pay for things overall, right? You get a good interest rate, you're saving money on interest. So I always tell people, do not forget that we are consumers and they need to make some money off us, correct? They need to make some money off us. The higher interest rates they can charge us, the more money they're going to make off us in the long run. We as consumers need to make sure they're making as little off us as possible. but still show them that we're worthy of, their product, right? Which is usually their money or that car or, that credit card. So today I just want to shed some light on these things, and just get people, we'll field questions. If anybody has any questions, credit, why do you need good credit? What if you have bad credit? All those type of questions we're fielding today. But let's talk about the types of credit. Erin, can you give us probably the most popular form of credit, right? Can you start with the most popular form of credit?
Revolving credit. So,
right?
yep.
See, I put you on the spot. You passed the test.
Yes, good. So with revolving credit, it's really just the credit cards. That's mostly what most people have. I guess knowing a lot of people don't, but the biggest thing with revolving credit is just using it in a way that's going to be most impactful for you. So most revolving credit, it's most people's store card. You can have your Visa, your MasterCard. Overall, you have a credit limit that they provide you with. So if it's $500, you definitely just want to make sure that you're not going out. You can go out. I mean, you can spend that $500, but in the broad scheme of things, spending that $500 isn't the best thing you can do for your credit wise.
What does that show someone who's looking at your credit, Erin? What does that show? If you get a new credit card and you max it out right away, what are you showing to somebody who's pulling your credit?
You're just showing that you don't you're utilizing, I guess, the full amount, and not necessarily whether or not you need it. Right. It's just the fact that you're using.
Is it showing maybe some form of panic or distress, right? Like, why did this person just got this credit card? They already maxed out on this, right?
Yep.
So to make you less worthy of the next time, right? And that is when we see scores dropping, right? Cassandra, I'm sure you see this when you're going over credit reports, right? Like if you see somebody opening a line of credit, maxing it, then opening another one, maxing that, opening it, right? What are you showing? Right?
It's really a red flag, that, and it's kind of an unfortunate situation. And I feel for these people who've got lots of credit cards and they're all maxed out. Something's missing there. Their income isn't high enough. So, and those are kind of delicate situations when I get somebody, and usually they're pretty embarrassed. It's like, it's okay. Like, take a step back. We're going to chip away at this with you. You've got some negatives we'll help you with, but those positive items, they are positives. People don't always see maxed out credit cards as a positive item. They are. We just got to help bring that balance down. And I always try to reassure my clients, like, we're going to help you. We're going to guide you through that process. We're going to educate you. We didn't get this growing up in school. Like, I didn't know how to manage my credit. I've learned it by trial and error as an adult. So I'm like, I'm going to help you understand how to get those credit cards. And people are like, well, but I need, the money is where the income isn't coming in. I'm like, all right, well, let's calm down, take a deep breath, and we'll just take this step by step. And that's when I kind of refer to the coach, to Erin. I'm like, hey, you're going to have a credit repair expert that's going to tell you exactly where each card should be to get those good points. So when I see those, it's a red flag that these people do need some help. They don't understand how to manage these. So I'm like, don't worry, your coach is really going to help you understand how to use all of that.
Right. I always go back to when I was training with Sam when he first brought me aboard, and he talks about a credit report is literally like a forensic file on. He can, it tells a story of you, and when people pull your credit, that's what they're doing. You may go for a job, right? You go for a job in the financial industry, right? You want to go work for a bank or deal with money. They're with your permission, of course. But they're going to pull a credit report on you because they want to make sure you're trustworthy. Yep. And now a lot of people are like, well, that's not fair. That's not on the job application. Tell me the story of why your credit is, not where we need it to be. Tell us the story of why. Well, because I got a divorce, I filed for that. Unfortunately, that's not on there. It is what it is, right? And our role is to help you, improve that. Educate you on how to, right?
It's really interesting to see how many different jobs require a credit check now. I worked for a casino back in Milwaukee, and that was one of the big requirements was a credit check because I was going to be dealing with huge amounts of money. And they had to do a credit check to make sure that I wasn't going to maybe steal or something. Because if I have bad credit, apparently that means I'm going to steal, which I didn't understand. But they just want to make sure that I'm trustworthy enough to manage, other people's large amounts of money. So it's really interesting to see how many different asks or jobs will require that now.
Yeah, that perception is there. Agreed. Like if your credit's not where they want it to, they're gonna think you're gonna steal. They're gonna think you got a ton of bills. You may be behind in a lot of things. You're gonna make bad decisions. You're gonna be, untrustworthy. Just on looking at your credit. So that's what today is about, is just getting people to understand how important it is in the big scheme of things. Like you want to turn your water on or your electricity, we need to do a soft credit check on you, right? Like, why do you need to check my credit? Because we need to make sure you're going to pay for this water. You're going to pay for this electricity. So it is a huge factor in, I had a buddy go through a divorce and his credit was just butchered, and he asked me for my advice. And I said, look, you're going to have to probably rent for the next year, and let's work on cleaning up your credit, because it really took a hit and you're already behind the 8 ball. So let's get to work. And Sandra, I love that's what you do. Like those are the conversations that you engage with pretty much on an everyday basis, where you're talking to people, but you're just like, your tone, your demeanor. It was funny. Every single call is this way with you. It's amazing.
Everybody gets the same service when I talk. Yep. Everybody gets the exact same service, even if, doesn't matter your situation or even your mood, like we're going to get through this together.
Yeah, I'm serious. It was call after call. I got to listen in. I had to be quiet because, they were like, Brett, be quiet. But, but I got to listen in on my training, and it was just the thing that just impressed me the most is you always are getting the same Cassandra. So, for those watching at home, know that this is what you get when you work with us. You get people who care and are invested in your success with us. So, and thus, that's why we got so many 5-star reviews. So boom, whoop, there it is. So there it is. You guys know that song, whoop, there it is, right? I'm 44, right? I'm not trying to age anybody. Whoop, there it is. A big hit when I was younger, right? Cassandra was it big, right?
I was pretty young, but yeah, I remember it.
I'm not saying you're my age, but of whom there it is. Well, that has that commercial with tag team with the ice cream.
Yes, I love that commercial.
My boys, they're about to be 5. They're just like, Scoop, there it is. So I put the real song on, and they're like, yeah, this is the ice cream song. I'm like,
the ice cream song.
The ice cream song. They're like, shaka. I'm like, that's German for chocolate. But anyways, we get a little sidetracked. That's my fault. I'm just like, whoop, there it is. I love that. So Erin, let me ask you about the main thing as a credit coach, right? Running a credit team, you guys are seeing is more than likely revolving credit, right? But also there's installment credit, right? You tell us a little bit about installment credit.
So installment credit is pretty much any loan that has like a term assigned to it. Yep. So car loan, most of them are secured loans. So car loan, mortgage. Every once in a while there are like those personal loans that may not have any sort of what is that word I'm looking for? Collateral on it.
Yeah.
But most of them do with the car loan and all of that. We do see those. Most people have a car loan. And then some people obviously in our program do have mortgages current. They're just trying to work things to either get a refinance or a new home loan. Yeah,
absolutely. So the two big ones are revolving and installment. Revolving is, we're going to look at it again. Revolving is it revolves, right? You can go up, you can go down, right? You pay up, you pay, it goes down. You pay, it goes down. You charge, it goes up, right? So that's the revolving door of that credit line. So a credit card, you charge, and then your bill comes at the end of the month, and you might pay a portion of it, or you can pay all of it. It doesn't matter with the revolving account. What we want to focus on with the revolving account is the utilization rate, right, Erin, Cassandra? Like, we want to focus on that utilization rate of a revolving charge account. So just because you got 5,000 on there, it was 4,800. Cassandra, you know, like she said, that's a red flag for anybody pulling your credit, regardless of your income. I want to tell everyone out there listening, income is not on your credit report. Ladies, is it on there?
Nope.
It is not on there. So you could be making $200,000 a year. It does not matter. All they're looking at is that utilization rate of that credit line. On that credit report is your highest limit and your last payment and your balance, right? So that is what they're looking for. It's just the data that's making up your score. Different types of credit, right? We got open credit that requires full payment at the end of the pay period. And then we got non-installment or service credit, right? Service credit, non-installment being like that cell phone bill, you know, like you got $100 a month plan, but if you send 1 million text messages or you go over your minutes, something like that, you may get charged extra. So you do have a set payment, but you can exceed that payment. So that's what they're talking about there. And then an open credit line could be like that Amex, right? Like that, hey, we'll give you $10,000, but at the end of the month, if you charge $10,000, you owe us $10,000, you know, plus a little bit of, you got to pay a service fee, right? Cassandra, you usually got to pay a service fee for a card like that, where they're just going to give you this open, like literally an open checkbook for the month, right?
A lot of those like charge accounts, they don't necessarily have a limit. You can open it and it's whatever you spend is kind of your high limit. So they don't necessarily have, some of them do. Amex is one of them that's a little bit different. Whereas they might give you a limit. Sometimes they don't, where they just, okay, it's open. And then like, let's say you try to spend, or you could like contact them like, oh, I'm looking to spend 10,000 at that time. They'll say, nope, sorry, we can do 5,000. So they're a little bit different in that regard. And the one thing I do want to mention about, that card specifically at American Express is people are like, okay, well, it's going to go to collections. They defaulted. They're not paying their payments. Some people are under the misconception that it's going to get sold to a third-party collection agency, and then they'll like, oh, I'll just negotiate it at that point. You really don't want to do that. Like if things are bad, I mean, we don't want things to go to collections, but if they do, we'll help. American Express typically isn't going to send it to a collection agency. They're going to keep the debt in-house. So when I see that, I try to tell my clients the difference between a charge off and a collection. A collection's with a third party, a charge off stays in-house, and that original creditor is going to try to collect on that full balance. American Express is a big one that'll keep it, and they're going to come after you for that full balance. We can still help with that. You know, people are like, oh my God, I don't know what to do. It's okay, we'll still help, but that's just kind of a big one that I've noted recently.
Yeah, and thank you so much for shedding some light on it, Cassandra. It is very important to, you know, understand, like people are like, well, I'll just let this go. And it's like, whoa, you have to understand who you're dealing with. And
exactly.
And that is, I love, you know, and that's the education. We're here to provide people that education before you make a decision, right? Erin, converse with your coach. Right? Erin, I was sitting with some credit coaches, and sometimes they're having the conversation of, we didn't talk about that, right? Erin, right? Like we didn't talk about that decision. Why am I seeing this on this credit report this month?
Conversations and education are the biggest thing.
Yeah.
Especially like in any circumstance like that. I feel like a lot of people, when they're like so far behind, they're like, well, we'll just deal with it later to a sense, which isn't always necessarily the best thing, because then you kind of hit your report twice in a negative way. So. Right.
And here's credit coach, right? That's, I think, this one of the things I love the most about our program. I used to work with a company where I was a coach, and I'm getting into some coaching on my own and doing some things in that regard. So I'm affectionately known as Coach Brett, right? So, but I was talking to a young lady, and she was working with the credit repair company to get her credit up so she could buy a car. But so they're working with her on that. She says her score's been going up since she's worked with them, but she doesn't even have a current copy of her credit report. And I was like, so how do you know your credit's going up? You know, she's like, well, that's what they told me. And then she says, all right, so she's in a Facebook group that I'm a part of, and she's wanting to buy a house. And I'm like, dude, does the credit company you're working with know, like, ultimately your goal is to buy a house? That goal is more important than that car to me, right? So she's like, well, we haven't had that discussion yet. They said, hold off until I can get my car. And I'm like, that is such terrible strategy. So Erin, how important is, like, that is a crucial part of what you guys do, right? Is that strategy for me? Cassandra has a tons of experience with strategy she's the beginning of the strategy, right? So can you talk about the strategy that goes into the job?
So it really just depends. I mean, what your main goal is. If your main goal is to buy, a home within the next, 6 months, yeah, you don't want to, have any new installment loans.
Mm-hmm.
Those can take time to actually start reporting positively to your credit.
Yeah.
If you have a little bit more time, then the circumstances are a little bit different.
Mm-hmm.
If you have time for that loan to, start to heal and report positively for you.
Yeah.
So yeah, it all just depends on your situation and, what's most important to you at that time. Obviously things happen, where situations change. It's just something that you have to communicate with, and, we'll change up everything and kind of go from there. But
yeah, so that strategy is integral to their success. And Cassandra, when you're on the front end, it's pretty much like your job to get into their business, right? Because
Mm-hmm.
I hear you, when you're excuse me, when you're talking, when you're starting these conversations with these folks, is, when you're asking about their goal, right? And you're making
Mm-hmm.
notes while which is incredible. So if like, listen, I brag about Cassandra, but she can listen to you and type like so fast while she's talking to you. It's incredible. It's an amazing, incredible skill. But I'm like, did you get all that? And she's like, yeah, I got it all, Brett. You can check. I got all that. I've been doing this for a minute. She's amazing at what she does. But that is all. Cassandra's taking notes for the coach. She
Mm-hmm.
wants the coach to know all this. She wants the coach to know you're thinking about buying a car, but she
Mm-hmm.
informed them that, listen, the home may be the ultimate, like, what's the ultimate goal? So
Yep.
if she's putting that in the system, we had a conversation about purchasing a car, advise them to hold off until they speak to their credit coach, right? That is the finite detail that she puts into that job at the beginning. That's with the gatekeeper. Those notes transfer to the coach. They
Mm-hmm.
transfer to the disputes team. They transfer to settlements once we go down that road. The coach's notes are transferring to the settlement people and all that good stuff. So the flow of information at My Credit Guy is just constant. And we want to get in your business because we need to know how to become the most successful for you. And,
Mm-hmm.
I always have a saying of, make your goal the goal. And I think that really resonates in what we do every day, because people, I was on a phone call with one of the coaches, and they were like, so they kept cutting the coach off. They were like, they had a plan already. And they were like, I've got $7,000 and here's what I'm going to do with it. And the coach was like, no. That account don't even worry about that account. It's been in collections for X amount of time. Let's worry about these. You need to get your debt utilization rate lowered. That's going to affect your credit way more than paying off that old collection. We need to work on this first, and then we can go to work with, taking care of some older collections. They had no idea who that debt was even owned by a collection agency. They thought they still were working with the company they had that debt with originally. So
I get a lot of that, Brett.
Yeah.
I people who are like, they're super excited to get started. They're like, okay, my loan officer said I need to pay this, and this, and I've got the cash set aside. I'm like, that's great. I said, but pump the brakes.
Yeah, they're just so excited, right?
And I love that, because they're really motivated then. And I'm like, okay, just calm down for a second. I said, if you're going to enroll with us, your coach is going to make sure you're using that money that you set aside the best way possible. We're going to prioritize those debts for you and make sure we're getting the most bang for your buck here. Absolutely. So just hang tight, because I know people get super excited, but I got my tax return, I got my stimulus, I'm ready to go. Okay, just hang on. We're going to teach you how to do it the right way, right. Because people, they come in real excited a lot of the times.
Yeah, they're coming in hot. And
yep.
I also, Cassandra, you have those conversations with the people that are like, but I don't have a lot of money. And I love how you are like, it's okay. It's okay. We're going to chip away. I love that chip away term you always use. You're like, we're going to chip away at this. But that's what we're here for. The support system at our company, it is just tremendous. I love that we literally meet people where they're at and set up, we set up realistic goals and we get them there. We help them. I mean, they get themselves there, but I feel like we encourage them. We draw the map and then they follow, our directions to get to their goal. So, I just enjoy that aspect of what we do. Little nuggets of information. I always like to, I'm trying to see, do we have any, we don't have too many questions. I think we don't have any questions because we're just killing this little session. I think people are just literally listening to what we have to say and they don't have many questions because they're blown away by this session. So it's so good. Erin, it's so good.
Yeah. Doing good.
Erin, how is it running a team? Tell us that. How is it managing a team? You've rose through the ranks of credit coach. What was your favorite thing about being a credit coach? And what's your favorite thing about leading a team?
I mean, my favorite thing about being a coach is really, getting people back to the closing table, getting them to their dream home. Maybe not even the dream home, their step to their dream home.
First home, right? Maybe.
Yeah.
First home ever, right?
Yep. Out of the situation that they were in and into a new one. I mean, that's definitely the best thing. And then transferring into a lead, just helping more people, helping the coaches on my team as well as, their clients and I guess just the overall, aspect of, helping.
Yeah. I there's this thing that kind of is very common with the team leads is just the humbleness of the team leads. It's always like, I run the team. I get, but it's always that humbleness of, that definitely trickles down for your team. When you have a humble leader, you tend to raise humble people. It's one of the biggest lessons I learned being in the military was, your attitude directly affects those people that I don't want to say above, but you're beside, but you're in the leadership role beside them. Right. So, thank you for doing what you do and giving the care that you do. And that just, you pour that into your team. You love being a credit coach. So of course it's a natural role for you to become a lead of a team because you love the job and you're going to make sure your people love the job and they do it to the best of their ability. So thank you for that. A little nugget of information from the credit coaching side of the house. Can you give us a little piece of advice or something to consider? Leave us with some knowledge, something like that.
Yeah, the biggest thing with, the accounts that we're talking about is, on-time payments and then the utilization. Just because you have a $500 limit does not mean that necessarily going out and spending $500 on that card every month is the best thing for you. Again, we understand as coaches that things happen and, that's what, that stuff's there for. But overall, using the card, the ideal range, 10% or 4 to 10% utilization is, where you're going to get the most benefit from those cards. When it comes to installment loans, it's really just, making on-time payments. And as those start to, grow in age, then, they're impacting you more positively. So.
Outstanding. And by the way, a mix of credit, we were talking about the different types of credit. A mix of credit is 10% of your score. So you're going to get 300 points basically by spelling your name right? That's what they always used to tell me when you're taking a test. We'll give you 100 points for spelling your name right, bro. You get 300 points just for existing in the credit world. So you've got all the way up to 850. So you pretty much have 550 points that we're worried about. 10% of those are coming from a mix of credit. So I was talking to a buddy earlier and he was like, Brett, I don't have any credit cards. Well, Cassandra, what does that show the credit reporting agencies? I don't have any credit cards.
There's not a whole lot going on there. And we if you don't have anything, we've got to start somewhere. Usually a lot of times people will come to me and they're like, well, I don't have any credit. I'm like, okay, this will be a real quick conversation. We're just going to boost up your score. I'm going to teach you how to build it. And then I go over a couple of quick things. There's a credit builder card that we recommend, and I send them that. I get their email and I email them that information. And I'm like, it's super easy. This is going to report to the credit bureaus in 2 to 3 weeks. It's a secured card. You just follow these instructions in the email that I send, open up that card, and then I kind of give them a brief overview of how to use that. Like Erin had said, keeping that utilization in that 6 to 10 or 4 to 10% is really good. And I'll even tell them, I get it. Like there's that limit. If you need to max it out, you can, but your score will drop if you do that. I said, so go ahead and use what you have to, but then keep in mind to get those good points, you've got to get it below that 10%. So I give them some tips that way, but yeah, we got to start somewhere, and I'll teach you how to build your credit. It'll be a quick conversation and we'll get you started.
Yeah, well, I mean, I think, Cassandra, that was an awesome piece of advice right there. So we'll use that as your little nugget, unless you want another nugget. But that can find what Erin said with where you start at. So okay, yeah, my bad. I didn't mean to cut you off there.
No, that's okay. Nope, you're good.
No more nuggets.
I do tell a lot of my clients, like, credit is a game. Yeah, this is a game, and we will teach you how to play it.
Learn the rules, play the game.
Yep, we'll teach you how to play the game.
Advisor told me when I first joined the Air Force, he said, Brett, learn the rules and play the game, brother. So that's exactly what we want to do here. And I hope today's session informed a little bit more or informed people about, the importance of utilizing credit, the types of credit, why credit matters. It literally is a report card of your health. If you're a runner and you will lift weights, or you do yoga, you go to therapy, you're going to be a lot more healthier than somebody who's, maybe on the couch eating too much food or whatever, not being active. So you're literally telling people the health of your credit by, how do you know how to use credit? Can you use credit responsibly? Do you have a different type of variety of loan products that you utilize? Do you make your on-time payments? All that factors into that credit profile. And as we said earlier in today's talk, you're literally telling people who you are with your credit score. Unfortunately, you don't have that opportunity on a credit application to say, I know my credit is here, but here's what's going on. Here's what I'm involved with. Here's what I'm trying to do to get my credit. No, they're going to make assumptions as soon as they see that credit score. So we hope we can help you out. Our website, let me just read it so I don't mess anything up, mycreditguy.com/you-made-it. mycreditguy.com/you-made-it. 2 dashes in between you and made it. All right. What else? 700 or so is a good risk. I just want to throw that out there. So sometimes people are like, well, what credit score should I be shooting for? If you're above a 700, right, ladies, it's pretty safe to assume you're a good risk for people to take on giving you money or giving you a low interest credit card, pretty much giving you the best product that they have to offer. That's what we want to do. We want the best product you have to offer. I don't want a credit card with a high, percentage interest rate, because I want to pay for what I'm putting on there and not pay because I'm using your product. That's what an interest rate is. You're using our product, and we're going to charge you more money based on how much of a risk we think you are. You're not qualified for that loan for that house because we think you're too risky for that amount of money. Go look at something more in this dollar range. Well, I make X amount of dollars. Doesn't matter. We think you're too much of a risk, regardless of how much money you make. And that's the one thing I want to leave everybody with. It is all about the risk of giving you money. That's how we are rated. So with that being said, if there's any questions, please shoot us an email. Hit us on our website. My email is Brett, BRETT @mycreditguy.com. If you need anything, mycreditguy.com, you-made-it. You made it, all right? Erin and Cassandra, thank you so much for your time
today.
Thank you. You guys are very busy. You're busier than me, so I'm going to shut up. Let's get back to work. And thank you for joining us. I look forward to having you guys back and spending some more time with you, okay?
All right. Awesome. Thank you.
You guys.
Bye.
Bye.